In this episode of the Seatrade Maritime Podcast, we'll be talking to Tim Smith from Maritime Strategies International about the outlook for the tanker shipping market in the second half of 2025. Tim, welcome back.
Hi, Marcus. Thanks for having me. Good to be back.
Yeah, thank you for taking the time. Really appreciate it. Tim, could you give us an overview of the tanker markets for the first half of the year?
Yeah, absolutely. So, yes, as with everything else, there's been a lot going on. It's been a busy first half of the year. I think the tankers just setting the scene. We saw quite a bit of downside through the second half of 2024, and Q1, as a consequence, was relatively weak. Not catastrophically so by any means, but certainly lower. And both spot markets and time charter rates were significantly lower at that point. This was in line with our expectations at MSI, so we were expecting the market to soften. Through the course of Q2, spot market certainly picked up. I'd say more limited impact from the likes of tariffs. We saw some improvement. Then across the course of Q2, things softened again. We had significant announcements from OPEC Plus in terms of production. And then in June, of course, we saw the conflict intensify in the Middle East with Israeli and then US strikes on Iran. And at that point, the markets went ballistic, essentially, certainly for sectors or routes and vessels with close proximity to that region, particularly the LCCs and larger product tankers. We saw rates skyrocket. Since then, the response from Iran to those attacks was relatively limited. The risks around, for example, Straits of Hormuz have declined, and we've also seen, along with oil prices, tanker spot markets move down as quickly, really, as they went up in late June, and are now back to levels they were kind of at close to the start of the month. And actually at relatively low levels at the moment in early July. Markets are kind of soft despite, some of that OPEC plus production increases we've seen. And that's really one of the big factors over Q2 was in April, alongside the kind of Trump tariffs and all the noise that went with that. We also saw OPEC plus decide to increase production significantly, accelerating effectively what it is the last 2.2 million barrel a day voluntary cut, effectively moving production up to reduce that cut. Their scheduled increase was about 140,000 barrels a day prior to April. They then announced around 400,000 barrel a day monthly increase and have followed on that every month since. And actually in July have accelerated that further at their latest meeting up to 500,000 barrels a day increase scheduled for August. So that's ramping up oil production and is putting pressure on oil prices. Interestingly, yet really to see that materialize in the tanker market in terms of supporting spot rates.
You mentioned the tanker market sort of went ballistic when war broke out between Iran and Israel and the close of the Straits of Hormuz, and it's now weakened significantly again. How, as an analyst, do you actually try and sort of factor in what's happening in the Middle East into your forecasts?
Yeah, I mean, it's a good question. I'll say what we do at MSI is we model markets. There's two key factors really in terms of Middle East tension. One is the Straits of Hormuz issue. The other, of course, we've touched on already, is the Suez Canal, Red Sea situation. So at MSI, we have models which we can actually adjust the availability, for example, of the Suez Canal and change how much tonnage is going through there. And our users as well on MSI Horizon can adjust that factor too to simulate different scenarios. Obviously, we can't foresee the future in terms of how these things play out, but we have what we believe to be kind of base case, high probability scenarios, which we publish. And then we and also our clients and users of MSI Horizon can change these kind of factors to see and test different scenarios in the market. So really it's about providing our clients with the scenarios and outcomes of those scenarios with our models and our reports as well.
Okay, that's interesting to learn how you actually sort of like look at that and try and factor it in. Now, coming back to what you mentioned there on the OPEC plus supply, increase in supply, how do you see the demand and supply balance going forward in the second half of this year?
So in terms of oil markets, that increase in production is interesting. It's similar in a way to what we saw around 10 years ago when OPEC Plus also made a decision to change their position from kind of supporting oil prices and restricting supply to one where they increase supply quickly. And in that period, we saw oil prices move down very quickly and tanker markets move up. The issue with that and the situation we're seeing now going into second half of 2025 is that you have to have the underlying demand to use that additional supply. Otherwise, it becomes unsustainable. And I think with other supply coming into the market from places like Latin America and also North America in particular, we're seeing potential for oil market oversupply and pressure on prices, oil prices. In the near term, that typically is positive for the tanker sector. When we typically see oil markets oversupply, it does mean more cargoes. But what happens if we don't see that underlying demand alongside is that stocks build up and the appetite for more supply weakens over time. So actually we see some downturn in markets further out. So it's kind of a bit of a kind of initial rush, and then you see a sort of hangover later on. So potentially, if we see more and more OPEC plus supply increases, we could see that kind of scenario developing. Not perhaps over the next 6 months, but over the next year or so. I mean, as I mentioned, tanker markets, actually spot rates haven't really responded too positively as yet to increases in OPEC plus supply, but we'll see potentially we'll see a bit more upside as we go through the second half of 25 and into Q4 for crude tankers. One thing just to say on the product side is really product trade has been quite weak this year, and certainly we're expecting growth in products trade to be significantly below crude. There is no equivalent OPEC plus for products, and actually on the latest numbers, we could even see products trade flatline on an annual basis versus 2024, or be weaker, because really we're not seeing the growth in that market. So yeah, potentially some short-term upside for the tanker market, but there are some issues in terms of that underlying oil demand position supporting sustained market upside.
So the second half of the year, you don't sound particularly positive, would that be? But
well, as I mentioned, we've been expecting markets to soften. We do on the supply side, which I expect we'll come to shortly, have increased in deliveries. So we're kind of expecting markets to move in the kind of range we've seen across the first half of 2025, albeit excluding the spike we saw in June from the tensions in the Middle East. So we're kind of we're not very neutral, I guess, in terms of market movement this year. Longer term, we see a bit more pressure on the market.
what is you mentioned the supply side there. What is the picture in terms of the sort of supply side new buildings coming into the market?
Yeah, so it's increasing, I think, in one word. So the tanker markets really have been on a vacation, really, from new builds coming into the market for a few years. And as a consequence, all of the disruption and volatility and upside we've seen on the demand side really has had an opportunity to be reflected in higher spot earnings, because those earnings haven't really been restrained in any way by fleet growth. But actually now we're starting to see that increase. We're going to see year-on-year increases in deliveries through 25 and into 26, as a consequence of higher ordering in more recent years. And that's going to start to play more of a role in terms of dampening the market, I think. We've also seen very high contracting in 2024. Should add that this year we're not seeing those kind of levels. So that does mean there's probably going to be a cap on the kind of fleet to order book ratio. We're expecting that to kind of be at around 15% in the near term, but start to soften as a consequence of higher deliveries. So tankers aren't extremely suppressed by oversupply potential, but the supply side is going to start to make itself a bit more known in the next few years, I think, in terms of a market driver, and one that's going to be have a kind of dampening effect on conditions.
Okay, that's something to watch out for, and we'll come back and talk to you, I think, when we sort of do future episodes of the market outlook. Thank you, Tim, for taking the time to talk about the outlook for the tanker market in the second half of the year.